There's been quite a lot of optimism about the latest European summit at the end of June. I think it takes some useful steps forwards in terms of moving towards a banking union where in the future bank bailouts might be organised on a European-wide basis rather than an individual government bailing out its banks, which has been so painful for the likes of Ireland. It's not the solution to the crisis, though, and I think these are incremental steps rather than a comprehensive solution. Such a solution is going to take a number of years, in my view. There will be continued worries about the European situation in this period. A solution, I think, is eventually going to require either debt mutualisation or monetisation from the central bank. I don't see another way around it. So I think we're a long way from that at present, and therefore there are going to be recurrent concerns over the European crisis going forwards. So under current law, a number of tax cuts are going to expire at the 31st of December this year, and also laws are in place that fiscal spending will be reduced as well. Now, this adds up to a lot of money, around 5% of GDP in the US, so it's a very dramatic contraction in fiscal policy if the laws aren't changed over the coming 5 months or so. So there's going to be a lot of debate, a lot of wrangling. The political system is very polarized in America at the moment, so you could see some tensions arise over this, but it's important that some sort of postponement or some sort of short-term resolution occurs. There is a lot to worry about. Clearly, there are a number of risks around in the global economy, but markets are forward-looking, and a lot of these concerns are reflected in valuations today. So if you look at the valuations of global equities, they're at low levels versus the history of the last 20 or 30 years or so. Now, from a long-term investor's point of view, that normally is a good starting point of which to buy assets for the long term. And it's interesting that this year already, global equities have actually done reasonably well at a time when people have been worried about the European economy, the Chinese economy, worried about the US and the fiscal cliff. So there are many companies out there that will be able to generate profits throughout the cycle, that are trading with dividend yields in excess of cash or in excess of government bonds. And I think over the medium term, these sorts of companies will provide good returns. Yeah, I think there are. The oil price has come off quite a lot in recent weeks, so that's going to be a boost to consumer spending on other areas of the economy, and it's going to be a boost to the oil importing countries. So that's the first thing. The second point I mentioned is that valuations are already low, so you're better off buying markets generally when there's a lot of pessimism out there rather than when everyone's very optimistic and paying a high price to own investments. And the third point really is that the Chinese economy has been a concern of late, and they are taking increasing measures to get their economy going. So over the next 6 months or so, I think the market will be less worried about China, and we'll start to see some signs of recovery there. And that'll be good for the world economy in general. Well, from what you read in the press and from some of the emails that I've seen quoted, it is quite outrageous what has happened there. I would be surprised if it's isolated just to Barclays, so we'll have to see if other financial institutions are impacted by this, and I would expect a wider inquiry. But there are going to be severe repercussions. There already have been some, but I think it's very important that these issues are tackled going forwards.